Hello, I'm Joshua Morrison, an investment analyst here at True Potential. This week, we're going to be looking at the latest US-China trade dispute, recent developments with Brexit, and finally the US Central Bank's interest rate decision. In relation to the ongoing trade war, which has been persistent since September, a Chinese delegation visited President Trump's aides this week to discuss a new trade agreement. Trump has described these talks as going well, with good intent and spirit on both sides, whilst the delegation stated it is making important progress. Meanwhile, in the UK, Brexit continues to dominate, with Theresa May announcing she will reopen negotiations with the EU on the Brexit withdrawal agreement to secure changes to the controversial backstop plan to avoid a hard border in Ireland. Mrs May has united her party on this and also held a meeting with Labour's Jeremy Corbyn in a bid to finally work out a deal with the EU that can get through Parliament. Finally, earlier this week, Jerome Powell, chairman of the US Federal Reserve, surprised investors with an announcement to keep interest rates at their current level of 2.5%, instead of following his previous conviction of raising them. With trade talks sounding positive between the two powerhouses, it should ease investors' nerves. Recent data from China outlined a slowdown in their GDP growth. With their economy being export-led, any deal could see a significant bounce in Chinese markets and thusly emerging markets as a whole. After the historic defeat Mrs May experienced following the last vote, the unification of the Tory party can be seen as a rather positive outcome. Whilst there is still a lack of clarity about the eventual outcome of Brexit, the recent vote did lead to the FTSE rallying to its highest level in several weeks. Finally, the Fed's decision to raise interest rates by 4 quarter-point increments in 2018 significantly hampered US performance, especially in Q4. The recent announcement to temporarily halt any further rises was well received by investors and saw US markets rally, with the S&P 500 and Nasdaq ending the trading day up 1.6% and 2.2% respectively. When tweeting about the meetings with China, Trump stated that no final deal will be made until he and President Xi Jinping meet in the near future. This formal meeting hasn't been announced yet. If an understanding isn't reached before March the 2nd, President Trump has said he will increase duties on $200 billion worth of Chinese goods. As for Brexit, Theresa May will meet again with the EU in an attempt to renegotiate the backstop part of the deal. However, the EU has already dismissed this, stating that the deal on offer is final. It remains to be seen if Mrs May's return to the EU will actually herald any changes. The UK is set to exit the EU next month on March the 29th. If a deal isn't reached, the options would be to extend Article 50 or leave with a no deal. The Federal Reserve have stated that any further rises in the interest rates will be data dependent. Whilst economists initially predicted 3 further rises in 2019, the revised figure is now closer to 1, a factor that investors should remain positive around. Ultimately, following the torrid market performance in late 2018, there is an ambiance of positivity as we head further into 2019, with many of last year's negative factors seemingly in the process of being rectified.